Good morning, good morning. How's everybody doing this morning? Hey, Terrence. How are you? Hey, Zeth. You guys can use the Discord room. Hey, Kevin. I'm good, I'm good. What's going on, Dean? Travis, Ben? Oh, the whole crew's here. Hey, Chris. What's up, Jam? How you doing, brother? Hey, Lonigan. Wow, hey, all right. The whole crew's here. Good to see everyone. Well, I'm good, I'm good. Oh, golf tournament got rained out. Hey, Dan. Well, folks, it's Tuesday, and who would have thought, I'm getting ahead of myself, but who would have thought we would have actually had a little short position this morning going into the open? That's pretty much this market. Massive selling. 3 days later, we've got a short position. Yeah, and we're 99% long going into the open. We should be recording automatically, all right. Ever since we switched to this YouTube stuff, it automatically records. But thanks for the reminder. So let's go take a look at our zones. Now, because the macro has changed, I'm not going to call that 48.59 bottom a bottom yet. Okay? I'm not egotistical enough to say that that's the bottom. Let's see, right? What I do know is that overnight inventory is 99% long because 99% of the volume has traded above the previous day's close. Now that is kind of strange in a market that we're supposed to have an Armageddon short, right? This is like kind of strange. You know, we've had these big 3, 4 down days, right? We have gap, gap. So let's see what happens. I'm watching this 51.48 level. And if we can stay above 51.48, then I would look for back and forth trade between 51.48 and this 53.46 area. Okay? That's what I would look for here. Because we've got all of this inventory trapped long and selling out. So I'm not looking for that big V-shaped reversal because that just doesn't make sense, right? So we are actually in that price spike of yesterday, which was caused by the fake news. So I think the base of that spike, even though it is not an official Dalton Stadelmeyer price probe, it did happen. And if price accepts up there, that just tells us, you know what it tells us? And I was trying to explain this to somebody this morning, right? You know, they were trying to say, how do you find the buyers? You know, the easiest way to find buyers are when sellers stop selling below a certain level. And let me explain this. Let's take 5,000 for example. Nice big round number, right? Remember Danny DeVito and Other People's Money? I like round numbers, right? So 5,000, we looked below 5,000 and failed. What did we fail? We failed to accept under 5,000. Look at the green, one little spike and then back up. We spent most of the time above 5,000 yesterday. So when price went underneath, it was rejected fairly quickly. What does that mean? Price was rejected. Now here's the simple thing that we're going to talk about, and we always talk about in this trading room, because our goal is to give you folks information that you can use to actually make a dollar, okay? And that information is that the sellers did not have to sell underneath 5,000, right? Right? Remember in Seinfeld, there's nothing for sale in Tuscany. So yesterday, there were buyers under 5,000. So the sellers raised prices. And the buyers followed price up. The bargain table was empty, right? So under 5,000, it's like, have you ever been to one of those Saks Fifth Avenue outlets and you see two ladies fighting over the same cashmere sweater and it's the last one in the bargain bin? That's what happened down here, right? There's nothing complex about markets. They want you to believe it's complex, so you're always second guessing yourself and overanalyze everything so you can't execute with a clear head. We want to strip all that away and just remove, as they say, just cut the red tape. Cut all that gobbledygook. So if you know that nobody needs to sell under 5,000, would you short? Right? If you know that nobody needs to sell under a certain level, would you short looking for lower? No. Right? Simple information. So as the market has its inventory here, it's been selling it quite nicely overnight. Right? And here, above 51.87, we have a short position. Now let me go and explain that. You see, this is the inventory of the overnight. And even though it's long above yesterday's close, there are people who were short underneath 51.87. When the market broke above, those short sellers are now trapped. In fact, they are trapped in this box. That's why when the market comes down here, it rejects up. It rejects up. Because those who are short in cost basis are holding the market higher by putting buy orders in to cover. Pretty simple stuff. It's a beautiful thing about market profile. It tells you where the short positions are. Right? If we had those to the downside, it'd tell you where the trapped longs are. Okay? So here are our levels. We've got 52.67, 52.27 quarter, 51.87, and the shorts are trapped under there. Right? News could cause it to go nuts, Corey, but don't worry about the news. The news is just a catalyst for the order flow. What happens when it goes nuts to the upside are when shorts go all in to buy at the same time, and the people who own the inventory go, psych, I'm going to make you pay higher. Right? It's simple. Now, but it's not easy. The execution is not easy, of course, right? So you can see that we're getting that extension now. You'll be looking at 52.27 as your first target. Your second target, my friends, will be the high of yesterday. Now, if we take out yesterday's high, right, that'll create more short squeeze, and the next target will be up here at that 53.20 and 3/4 level. Okay? There you go. Those are your longer term levels to the upside. Now, downside. If we take out 58.71, we're going to come back into the cost basis of the overnight, which is between 48 and 87. I'm sorry, 51.87. Why did I say 50? Sorry, I need some sleep. So that's where the cost basis is, right? I'm even myself with this move up, right? I'm still not sure we'll take that out, and I'm kind of waiting for that move down, right? I'm kind of waiting for that move down. So I'm going to say I'm short biased because I'm looking for a correction lower to overnight inventory. Now, when the market opens and we don't get that move lower, then it's telling me, you know what? My bias is wrong, right? Hey, Ed, right? I'm short biased because inventory is long. And I'm not sure that the selling is over yet, given all the economic hoo-ha that's going on. I can't keep track of it, but, you know, it's funny. 2 days ago, it was end of the world. This morning, I read in the Wall Street Journal, is it time to start buying? You know, it's really hilarious how people go from, oh, dear God, I'm scared, to that greed, right? That greed starts to slip in now. Should I buy some? Should I buy some? You know? Should I buy some? Right? Yeah, it doesn't take much to move something up on low volume, Ed, if you have all the inventory. If I own all the inventory under 58, 51.87, right, short term, it's easy to push it up. You just cut the supply. You just don't sell anything under 5,200, right? So anyway, I'm short biased. Right now, the market's telling me I'm wrong. Let's see what happens when we open, right? So that's what we're looking at long term. 51.84, and then of course the close, and then this level here, which is my big level at 51.01 right? So let's see what happens, right? Now, I haven't checked my email this morning in the last little while. Have the brokerage firms dropped margin? I do not know. I think they're still charging 19 grand a contract, aren't they? Now, your prop firms, Travis showed me something very interesting from the prop firms and how they operate. I'll have to do more research into that. So, how we navigate it, because look how wide the stops are in this market, ladies and gentlemen, right? The stops are huge because each half-hour candle is massive. So the way I would trade this is I will use my 1-minute candles to trade. And just remember, if the market opens and the price action is really choppy, if it's really violent, you don't have to jump in the first couple of minutes, right? There is no reason to go and try and be a hero, right? You are just going to blow up a lot of money for no reason at all, right? Where is the open? Oh, it was all the way down here. Yesterday we opened under 5,000. Now we're going to be opening a couple of 100 points higher. What a crazy business. Thanks, Ed. How do you use the previous day and high and low? Well, right now, they mean nothing right now. right? So let's address that. Where's the previous day high? Previous day high, right, is up here at 52.86. The previous day low is at 48.67. So right now, they're meaningless. If we take out yesterday's high, there'll be some short covering. And I'll see if we do a look above yesterday's high and fail, or do we do a look above yesterday's high and go, right? Well, it means nothing because structurally we're nowhere near it, right? So headlines create order flow. Order flow transacts against inventory, right? You guys can have the algo discussion and all that stuff, but I don't care about any of that. I don't care about algos. I don't care about politicians. All I care about is my trade setup and my risk, right? I am focused. If I'm going to put money at risk, I could give a flying you know what, right? Is my trade available? Is the way I do business present? Is the risk manageable? Or is the risk too much for me to put money on the table? Right? I don't need to prove anything to anybody. Right? I know how to trade. Right? If I see that the market is behaving in a very quick manner, and you know what? I might not be that fast today. Right? Yeah, I don't know how to pronounce your name. Roll Neblith. But you're talking about stuff that really doesn't matter. Right? You can make all kinds of excuses and you can pontificate all you want, and that's great. But how are you going to make money? And more importantly, how are you not going to lose money? That's all I care about. And that's what I'm here to help people. I'm here to help you execute trades, right? Or not. Margins of 25%? Coolio. I haven't looked at my email. AMP. I haven't gotten an email from AMP. I feel left out. Right? Right? I don't mean to offend you. I'm just going to call you Rolly. Right? But I don't spout stuff off that's not useful to a trade setup. I want to know where the buying is. I want to know where the selling is. Can I do business? If I can't do business, I'll sit and wait until my business shows up. Right? If it's beyond my capabilities, if the market starts freezing, if the market, has gaps in it and starts jumping around all over the place, right? I'm not gonna execute. I'll just chill out. Now, you guys, people like to talk about a lot of stuff, and they're really, really influenced by what they see on Twitter and news headlines, and I understand that. But the whole deal is to manage your risk and manage your business, right? Right? So there's going to be hysteria, and you just have to channel that out, right? Ah, thanks, Elsie. Right? So now we're in my cost basis was 51.51 to 67. Double it to 51.98, right? That's double profit zone. 4 times profit zone is 52.61. And then 8 times profit zone will be up here. So 1, 2, 3, 4, 5. Right? Now it doesn't have to get up to 53.87. but that's 8 times profit. So right now, if you were short, for example, right, if you're shorting this puppy, right, if you're doing the look above and fail of 52.61 and a half, right, say you're short 58, 59, right, and you've got your stops above 61 half, short 58.75 on one, put in a bid at 56 and see if you can get a fill. Now, if you can't get a fill, it's going to rotate back up, right? As long as the offer stays under 61 and a half, you're okay. Now you're in trouble, right? We need that seller to push price down. If the sellers aren't willing to sell at lower prices, your trade is not worth anything on a short. That's why if you were long, your risk is here. Your risk is here. If you're short, I'm sorry, not long. So if you're short, your risk is 61 and a half. You can see that they stopped selling right there at 56. So you got to put some bids down there and see if you can get hit. Otherwise, if it starts taking over the 61 and a half, you're automatically stopped out. Right? You need to admit you're wrong quickly in this market. You need to cover trades before they get out of hand. If you are the kind of person who, when things start to go wrong, if you freeze, don't trade. Right? If you don't have the skill to not freeze, don't trade. So say I was shorting her. If I was short at 58, my stop would be above my level here. So if I was short 58, they would have taken my stop. The business reason for the trade is the sellers are forced to sell under 61 and a half. If the price goes over 61 and a half, it means the sellers have seen buyers and they're raising the price. Very simple. Your analysis should be simple. So your execution can be simple. Because the last thing you need when you're executing is to be running through 50 different things in your head. Because you are going to execute like crap. Sellers think they can sell higher if there are buyers present. If there are no buyers present, sellers will put it on sale to capture what buying there is at the levels that exist. Right? You have to think of yourself as a seller of inventory. It's simple as hell. It's not easy. If it was easy, every idiot would be driving a Bentley and living in a 20,000 square foot house. Right? You don't get how they know there are buyers around? Herb, if I gave you $100 million to trade with, you bloody well better know what the hell you're doing. It's a business and they have skill. How does your doctor know where to do surgery? How does your accountant know what the tax laws are? Right? It's called a skill. It's not magic. Now the sellers have to compete under 61. Right? Now it's on sale. Exactly. So had I been, instead of trying to explain that to you, had I been short at 60, I'd have some 53 bids in and be covering. You can look at RSI if you want. I do not have a trade setup that goes around RSI, right? And when markets get out of whack, RSI is not really if you have a way to trade using your RSI that can manage your risk, go for it. I once held a stock at 90 RSI for 3 months at $30 by limiting supply. So on NASDAQ, not OTC markets. Right? So, holy, jeez. When you see stuff like this, don't get sucked into it. Don't get sucked into it. The other thing, folks, you want to look at the order book. Okay? The order book in this market, it's 20 aside right now at every tick. If you go and look at the NQ order book, is it full? I'm curious. Where is that NQ order book? Has anybody looked at the NQ order book? It's like there's gaps all over the place in it. It's one aside. I would not be touching that with your money. No, thank you. Right? Remember, new traders, be safe, okay? As the great Red Foreman in the 70s show said, do not be a dumbass, right? If the price action is beyond your skill and ability, sit out. Hey, Aubrey, what's up? Yeah, and you're going to get slipped, right? This is a wonderful time for the market to feed on fresh meat. Okay, and people who think that they are really, really smart are fresh meat, right? Let's see where we open, right? You can learn a lot watching this market. Yeah, we're under 40 in the VIX now, eh, Aubrey? Some market conditions favor wholesale business, and there are market conditions that favor retail business. You got to know and stay in your lane. So, after a big move down, where's the previous day high? It's up here somewhere, isn't it? So no gap, but we're going to be opening on a significant up from where we closed. So just be careful, folks, okay? Be careful. Yeah, when you don't see your trade set up at, exactly. Why would you do business, right? Because if you're just guessing, oh, I hope this works. Let's throw a grand at it. I mean, if you're throwing $1,000 around, throw $1,000 my way. I'll take it. I'll at least have a good time. The levels are working. Yeah, they've got some people trapped pretty bad. Let's see where they sell into it. Nobody defends their position. That's the quickest way to end up living in a cardboard box. That's a little secret that nobody tells you. Buyers never defend their position. You defend a house with a gun. Military people defend their positions. Traders don't defend positions. That's the easiest way to blow out all your money. I've actually seen a man lose $120 million defending a position. No, nobody defends positions. You trade according to the order flow. It's a business. If buyers are present and you've got inventory, you sell it. Boom! There we go. We're off. Curious what the breath is off the open. Lear? Anyone? Oof. Bids at 20. That's 52.68 so far. Watching that overnight high. There's buyers at 72. Because every time we get down there, we offer up. There's sellers at 75. Might do a stop run over the overnight high. If we can't, if they're dumping into this here, look for a break of 72. There's 72 right there. 30 to 1. Thanks, Tulloch. Told you. Short 69, covering 64. Flat. Now let's see if we can get under 61 and a half. This is overnight inventory correcting. Thanks, Lear. Look below and fail of 61. They're going to sell into it around 68, 69. There's the sell. Ah, no, that's not for me. Another look below and fail of 61 and a half. Just take it easy. Let them work out 61 and a half. I want a couple of candles under 61 and a half in order for me to short. Till then, I'll just leave it alone. All I care about is the candle. I don't care if it's a wick or a twick or a bwick, right? I don't care about any of that stuff. I care about the print. I don't care if it's a wick or I don't care what the candle looks like. Seller at 61 half. That's what we want to see. That's what we want to see. There's the next candle. Right? Remember, if you are putting out shorts, put your bids in. Otherwise, what's going to happen is the market's going to go down there and somebody else is going to grab your supply. Right? Jesus, look at that thing go. Wow, they just trapped people again. Oof. Oh, dear God. One sec, folks. Sorry, guys. 1 second. One sec. Sorry, folks. I'm just helping somebody who's got a subscription problem, and he's frickin' doing this right now. All right. It's just choppy. Bear with me for a second. All right. Do we have that seller now? Do we have the seller at 61 and a half? I apologize. Short 55. Flat 50. 52, sorry. Looking for buyers under 48. If we come down there, if they fill, look for this 36, 37 area. Yeah, don't be the worm. That's good. Don't be the worm. Right? If you're short, you can stay short because we're going to come down into this cost basis here. See, this is all cost basis. So be looking for this area here to cover. This is the inventory correction that I was looking for. Right? I'm just scalping it small because I'm just keeping my risk really tight in this market, and I will really try not to overtrade because you can get into a lot of trouble really quickly. Dropping into this 37 area here, 36, 37. Sorry, that's 38. Ed, I've been trading for 33 years, Ed. And that was one scalp. And I don't imagine that I will get stopped out here and there, right? So you also got to admit, I'm used to like making markets in 8 stocks simultaneously, 8 to 12 stocks. Like watching 8 to 12 level 2s simultaneously, moving market makers, all of that stuff. So my skill level, it's like you, right? You're an ex-policeman, right? So, you know, if you put us out on the range, right? If you put us out on the range or put us into a situation going through a door, your instinct level shooting will be a lot better than mine, right? Because you're trained with your service revolver, right? Same thing. That's all it is. Right? That's all it is. And the other thing is, now I won't abuse it. I had one quick clip that worked. Now I'll wait and see where the market, where it tells me, right? I'm not going to overtrade because as soon as you start getting too big for your britches, the market slaps you, right? So I told you we're going to come into that 38 level and slow down. That's exactly what we did. Now, how did I know that? Because I know the cost basis is here. So if we went and draw a volume profile from there to there, you'll see this is the cost basis that we took, and we took this stuff and we sold it higher, and now we brought it right back to where we paid for it. Do I have a playlist? Yeah, we have videos, we have written stuff. In our room at Microefutures, we've got all of that. I have a 5-step method on which I take trades. I do the same thing all the time, Kumar. See how we came to the cost basis? And now the sellers are lifting the price because they stop selling, buyers will chase. As soon as you shut off supply, buyers will chase. Especially if everyone's short underneath. Like we could tell everyone's short here underneath 52.12. That's why they're front running and there's bids coming in here, right? Because as soon as you get down, why not? They are distributing. Just at a higher price. Herb, do you understand commerce, right? Why stop selling? They're still selling. They're stopped selling at 36 and sell at 40. Wouldn't you rather sell something at 40 than 36? If the buyers are present? I want you to think about that. Yeah, there you go. It's just simple, basic commerce. So the sellers see buyers, and that's what they do. They're raising prices, just like I told you they would. I told you that they were going to come right here. This is where they bought the crap. This is where they sold it. This is where they put it on sale, right here. You don't recognize buyers because you haven't thought about it that way. That's all. It's not your fault, right? You've been conditioned to buy stuff. You've not been conditioned to sell inventory, right? So you take this cheap crap, you go sell it here, right? When people don't want to buy it, you put it on sale down to where you bought it, you stop selling it, the buyers will come in and you can raise price. Pretend this is a chart of the sales of oranges. No, Chris. If there are trap shorts below, big money will want to take it higher, make the shorts force them to pay higher, and sell to them. You guys have to think like distributors. Don't think like you're standing in line to buy an iPhone. Think like you're the one selling the iPhones, right? Don't think like you're standing in line to buy something, right? That's a consumer. And God bless the consumer because they keep the economy going. But when you're a trader, you want to be smart money. You want to be the person selling, not the person buying. And I'm not saying short selling. I'm saying selling inventory. Every market has an inventory. And you want to be the seller of the inventory. You don't want to be the buyer. Right? You have to think like a seller. Think sellers whip up interest. Why do you think there's advertising? When price goes up, that's advertising. Right? We want to go from dumb money to smart money. Okay? That's the goal. Right? And don't worry, we all start out as dumb money. Nobody ever starts out as smart money. What's up, Mike? Can we upsell them? We can get them to buy those, sell them the undercoating? Right? Come to Crazy Mike's House of ES. We will not be undersold. Free shipping. Anybody here ever watch the movie Glengarry Glen Ross? No? You should all watch it. Get them to sign on the line that is dotted. Looking for 5261. Exactly, Puck Hog. Okay. This is just chop. I don't want to play in that. Let's see if we can get to 61. Hey, Jonah. I'm good. I'll send you a link, Mike. So we've got sellers up at 56, 57. You can see them. They're all kind of parked here. Now, if they see buyers, they'll raise their offer up to 61. Otherwise, they're going to push price down. See? Oh, look, they saw some buyers. They're lifting the offer, getting the buyers to chase price higher. And then once they start competing, they'll push it lower, right? Other people's money is great. You'll learn what a yard chauffeur is. Oh, yeah, it does. Nice, Lear. Done for the day is always good. Do your business, go fishing. Get some rotation now. Let's see if we hold 61 and a half. I'm surprised. I think this move up has taken a lot of people by surprise. Yeah, trading places is still my favorite. You know, the funny thing about trading places is the way those two Duke brothers act, that's exactly how owners of brokerage firms act. See you, Fly Layer. Have a good one, brother. Now, there's always buyers. You know, have you ever negotiated for something, Herb? They ask for 50 bucks and you go, no, I don't want to pay 50. That's what's going on here. So nobody wants to pay over 68. Don't worry, just take it easy, Herb. Don't try and figure it all out in one day. Okay? Just just relax. Oh, let's see. Hey Fahad, how you doing this morning? I missed that short. That was a nice look above and fail of 61 half. But these 1 minute candles are pretty big. I like to wait to see if they close, whether the seller is still there, but gee whiz, 68 all the way down to 45 in 1 minute. You know, that's another thing too. I don't mind missing trades. Kind of like, oh, that would have been nice. There's the bid. I don't like to trade in the middle like this. Right? I just leave this alone. I missed that trade. And the look below and fail is a lot lower than we are right now, so I'm not looking for longs right now. Algos. Well, the algos do the execution, but what are you trying to get at with that? I am listening. So the humans aren't actually doing the execution, but you understand that there is an agenda, right? At stake, right? There's an agenda in play, right? The algos will make that agenda, will be able to execute that agenda more efficiently, right? The large candles are being created by the fact that the order book is thin. Does that make sense? So it's not like Terminator Rise of the Machines where the algos just take over and trade willy-nilly. You can the guy who just wrote in front of you, Mike, he's a Wall Street top tier algo writer, quant, right? He'll tell you the algo is written to take advantage and make the business more efficient. The reason why the candles are big is because the order book is thin, because no large trader in their right mind are going to be putting risk on in a market where the macro is changing every half hour. Got it? So, yeah, I mean, I'm sure they have neural nets and all that stuff. I don't know. It's beyond me. But all you have to worry about is your risk. So when you see a 1 minute candle that's 15 points, what you need to go is, oh crap, you know what? If I'm wrong, I got to admit I'm wrong quick. Does that make sense? That's what your takeaway is from it. Always try and take information that you can use in a practical manner, right? If you look on Twitter and all these places, you've got all these people talking crap about this and that and this and that, but none of them can trade their way out of a wet paper bag, right? You need practical information that you can use to actually execute, right? And if you're not executing, you need to use that information to be careful and manage your risk and preserve your capital. That is the most important thing in these times, is to protect your capital, right? Well, Corey, you've been listening to me for a week now, right? At least. What have I been saying about trading this market? Do you mean now? If I were you, I would trade Globex when it's calmer. You use the sim to learn how to use the software. Then you use those funded trader accounts so you don't blow up all your own money. So generally speaking, use those prop firms, and that'll teach you discipline, and that'll teach you, how to manage risk. So, you can use a couple of micros, right? Now, if you want to, you got to not treat the sim as a video game. Use the sim like a pilot uses the sim. So you can learn where to push the buttons, learn how to execute fast, learn how to manipulate the software and do the keystrokes, right? There's still a mind-body connection between your brain and your hand on the mouse, right? You want to get that down so you don't freeze, so you don't fat finger things. You know what I mean? That's how you practice execution. And then go to the funded trader programs, right? The sim is to learn how to use the software, right? How to put in orders quickly, how to cancel orders. Funded trader programs are those prop firms like, Apex, TopStep, Take Profit Trader. You pay $30 a month, they let you trade an evaluation. If you're any good, then you trade real money, right? And what that teaches you is discipline, right? So you don't do crazy things. Corey, man, one of these days, reach out to me. We'll have a talk, okay? In fact, because you've been around, I'll do a phone call with you, okay? When you have time. All right? And we'll discuss this. All right? I look at the overnight session to see overnight inventory is long, so we had a bit of a correction lower, but not a meaningful correction, right? So I was looking for all the way down here, right? We opened and then we came down to 30s and we stopped, right? We didn't get anywhere near the close of the previous day or any of the other references, right? That tells me that there's a bid. If we take out that overnight high, look for a run higher. I don't know where the sellers are going to step in, Tobias. If I knew where the sellers were going to step in, I would not be hanging out with you guys. No offense, I'd be sitting on my Jeff Bezos sized yacht somewhere in the sun. I need the market to tell me. I wish I knew where they're going to step in. I know they're stepping in here for right now, but I don't know where they're going to step in up here, right? Like, I have no idea what's going on up here because we haven't gone up and transacted up there. Does that make sense? So we're taking out that overnight high. That's going to create a little bit of buying. Do they sell into it? Or does it create enough buying that we can merit raising price? Right? Here's the thing, listening, right? Sometimes in this market, it takes longer than half an hour to correct inventory. Especially if you've trapped enough shorts underneath a certain level. You can milk that for as much as it's worth, right? So just use the levels. There's a little, they popped the previous day high and they sold into it, right? Now let's see where they backfill to. I'll be looking for 76. If we can't get down to 76, it's going to turn and rotate back up. Right? I don't know where overnight inventory, where they're going to sell into it. See, now we know they sold into it right there. Now as we get up there again, watch the reaction. Watch the reaction up here. If you are shorting, your stop is above the previous day high. And I would be looking for cover bids around underneath 77, just right here. You know, if you're short 85, put some bids in, because if you're short here and you can't get covered on the bids, ooh, that's going to happen right there. Kaboom. Look at the B low. It's right where I told you it would be. There it is. We're going to test the overnight high. Found some bids. Do we rotate up or do we rotate back in? Right? There's that buying I was talking about. Right? You can use previous day high as a target, definitely. You know, but I like to use, you know, these levels. Oh, there we go. And they sold into it. It's going to be a two-sided market, you know. Let's see if we can hold that overnight high again at 76. Let's see where the next opportunity is. These A periods are long, massive ranges. This one was at 31, 52.31 to 52.89. See, look at every time we come down and touch that 77, 76, they pull the offer. The market moves higher. And now let's see if we can go take that, get above yesterday's high. If we get above and stay above yesterday's high, be careful shorting. There's still a seller right underneath 92, 91. But if those sellers see buyers, they're going to lift. See, like that. Now be careful, because when you're doing a short squeeze in these bear markets, right, be careful, because somebody can come in and hammer this thing with size because their old price is up. Let me sell 5,000 contracts. Just watch out for that, okay? We get responsive buying at yesterday's high. We'll move up off of it. Well done, Jerry. Well done. Nice work. Way to work. We accept over 52.87. Be careful on the short side. Don't take anything for granted in this market. See, look at that. Those are market buy-ins right there. Don't take anything for granted in this market and watch your risk. Next level up, I'm looking at that 53 and change, and then 53.08 and 3/4. pretty jumpy right here. Just make sure that you only trade your setup. Coming back down to that previous day high, let's see if we can hold it. If we can't, it'll accept underneath 86 and you'll be looking for 76. There we go. Looking lower, dropping in, dropping in. Remember, if you are shorting, just like when you're going long, and as soon as you're in a trade, put your sell orders out. So if the market goes up, it'll take them. If you're going short, go put your buy orders in, so when the market drops, it'll hit your buy order. Some bids at that overnight high. Told you 76. Told you if you were short under 86, put your bids in 77, 78, 76. Right? Do not let opportunity pass you by. Take advantage of getting paid. There's nothing wrong with being short 85 and covering 78. I'll take that trade all day, every day. What is this? Welcome, TUTR. What is this? This is a trading. You've stumbled into a trading YouTube. See ya, hello, have a good one. Get some rest. So those who are joining us, I apologize. We are not. This is not a cooking channel. We're we will not be discussing how to make butter chicken. We yeah. Hey, the first time I saw TPO charts, I got a headache. Right? When you first look at these TPO charts, when you first try to trade off them and look at them, it's like you get an ice cream headache. You get that brain freeze. It hurts. It takes a little while because we're not used to seeing them. So let's see. Can we get over 5,300, ladies and gentlemen? How many trades have I taken today? 3. 2 good ones, 1 scratch. Stop out. Loss. Back underneath that previous day high. Let's see. Well done, Jerry. Well done. Just keep racking up those base hits, brother. Right now, we're in a bit of a what we call a rotation, and we're just doing this rotation between 77 and that 52.96, just back and forth, back and forth. See you tomorrow, Jerry. Have a good one. So, when you have a rotation now, if you're a fast trader, you can do the look below and fail of 77, the look above and fail of 96, right? You can just do it once. That's one nice trade, 77 to 85, 90. It's beautiful, right? Get paid and go to the beach. Don't take your laptop to the beach. You'll get sand in it, right? Exactly. Do not give. Steve says 25%. Don't give back 25%. I'm like, don't give back more than 15% of your gains. I'm a little cheaper. Right. I'm cheap. What do I think of tariffs? I have no clue. I have absolutely no idea. I don't think anything about them. All I know is that they've changed the macro and they've changed the order flow. I am not a macro trader. I don't pretend to think I know what tariffs are going to do and how to respond to them. I don't I don't deal with any of that stuff. I keep it simple. I look for the bid, I look for the offer, try and do a little business between the two of them, and then I mind my own business. Hey Chris, can you please show how you would drew? Uh, yeah, Chris. So my original balance level, remember when we were doing the one-on-one, right? Was back all the way here. So I was using that high, that low. When we look above that high, we come right back to that low. That's pretty much it. No. What I do my balance levels every morning, Chris. Now I'm up like at 2 in the morning your time, right? Because I'm in UK, so I'm 5 hours ahead. And then what I do is I will maintain those balance levels 2 times, 4 times, 8 times, right? Now, if we get a huge move and then a redistribution higher or lower, then I'll redo them. But what I do generally do is I just keep them. Now in these ranges, sometimes you redo them if there's a really big move after news or something. So my risk is always structural, right? So say I was doing a look below and fail. Here's the look below, right? Go from one zone to the other, look below, fail. If I was long here, my stop is going to be just underneath the level. And then I'll be selling at the next levels up. Pretty simple. All right, we're getting some extension to the upside. Let's see if we can take out 5,300. Yeah, I don't pretend that I'm a macro trader and I know what tariffs are going to do or interest rates or PPI or CPI. None of that stuff interests me. All I know is when they put out news, I don't want to be in a position. It's very simple. I look for the bid and go long. If I'm short and we find the bid, whoa, nice stop run. Right? Yeah, somebody got really short. Nice stop run. If I was to redraw my balance zone, if I just come in and started trading, I'd probably use this as my balance right here. Yeah, you got to be picky. Definitely. Nothing wrong with that. That's why I don't overtrade. The conditions also depend on your skill level. I don't know how to pronounce your name. Tutor? Tutter? T-U-T-R? Right? So it's a really fast market and you got no skill, don't trade. Right? If it's a slower market and you're building up your skill level, go ahead. Right? Don't outkick your coverage. Right? You got to have a little bit of humility. Sometimes it's trading too fast, right? Sometimes it's too choppy, right? You have to be able to make the determination about the business conditions and determine whether you want to put risk on, right? After you spend some time doing it, you'll start to understand the conditions. Oh, where was the trade that I scratched? It was here. Was it here where I was short? No, where was it? It was off the open. It was one of these look above and fails. I tried to short. Yeah, it was right here, if memory serves. Right? It came underneath. I shorted underneath. I was like short 59 or 58, and I had 61 as my out. And then when it went up like that, it took me out. Right? There's a business reason why I had my stop there. Right? I didn't feel like getting stopped out. Or was it here? It was one of these look above and fails. It was either there or there. Either way, I got stopped out. Okay. Well, we're really just putting the boots to the shorts, aren't we, today? That hasn't happened in weeks. Now, is this price stability? Did we find the bottom? I have no clue. We just got to watch and see. Right now, they're not really trying to do anything. They're just trying to do their business, Rolly, right? So if you're long inventory underneath 52.85, you're trying to sell it up here, right? Plumber, mechanic, whatever you want to call me. I'm an old stock mechanic. That's where I learned my business. Well, the market profile chart right now has very big ranges. So I would use the chart on the left-hand side, the 1 minute candle chart. That's why I like 1 minute candles. They allow you to cut up the range and trade that way. It really helps you with your risk. You know, say you did a look above and fail at 5300, you know, you'd be selling 52.97, 96, your stop here, putting your covers here under 93, down here, down here. Put your bids in, right? If the market can't fill your bids, there's no supply. It's amazing how much information a 1 minute candle chart will give you. So right now you can tell that the sellers are all right here at 53.04. And then they stop selling when we get down here, right? That's that rotation, those rotations. That's what we're getting, right? So great. If you're short, that's beautiful, right? Now you need the market to take out that low of that candle here. There you go. Beautiful, beautiful short. Nice work. Good call, right? And we're going to come into a cost basis here. It's going to stop selling and the offer is going to move up. And then when the sellers start to compete, the offer will come down again. And if you're still short, put some bids under 84 and see if you can get tagged. If you can't get tagged, go up and take product. There you go. There you go. Right? There's all sorts of people that are doing business in the market. I don't pretend to know who's doing what at what time. I don't really care. All I care about is where the bid is and where the offer is, right? And whether my trading setup or the way I do business is present. If the way I do business is not present, I don't put money at risk, right? So that's what we do, Tutter. We really try and keep the conversation onto the trade, right? So a lot of people will come and talk about algos. Some people will talk about who's doing what. I don't really care, right? Not to sound rude, but what I care about is helping normal, regular people who don't work in this business, right, to help them make money in a practical manner without all the double talk, right? That's all I care about, right? How do you not blow up your account? How do you know when to do business? How do you know what trade to take? How do you know when the trade makes business sense? How do you know when the trade does not make business sense? Right? That's all I care about, right? Right? We want you to make a living. This is not, oh, you know, I made 200 grand a day trading. This is not that place. There's lots of places that you can go for that, right? I just want to help regular people make a living and not blow themselves up. Because you know what? You guys work hard for your money. I don't see why you should just be throwing it out the window. Now, if you have a money tree in your backyard, you got to tell old JJ where your address is. All right, let's see if we can clear out the 93s. And as we're coming to a close, does anybody have any questions? We cleaned out the seller at 93. Yeah, I can talk about cost basis. What do you want to know about cost basis? So you bought 100 oranges, you paid 10 cents an orange. That's your cost basis. Go sell them at $1, right? Distribute as many as you can at $1. When people don't want to buy them, put them on sale at 90 cents. If they don't want to buy them at 90 cents, put them on sale at 80 cents. How does the market behave when it goes to cost basis? It depends on the order flow. So there's a bunch of sellers and it comes to cost basis, it might go underneath cost basis. And then you have to go into the discount zone. Sometimes the market will come and sell down right to cost basis and stop. There is a lab, Moran. We'll be doing a price action lab at 11 o'clock in the private coaching room. We'll see you all there. Where did you learn? I've been in the business for 33 years. I've taken 200 companies public and distributed the stock for the insiders, stock promoters, those kinds of people. So when you guys were buying stock, I was the one selling it to you. That's where I learned the business. Retail I've been doing since 2012 after I had a heart attack. So I had to do something a little less stressful. That's when I started doing this stuff. Hey, Eric, what's going on? Thanks, brother. Remember, folks, right? Your trades have to make business sense, right? And if someone's teaching you how to trade, if they can't explain the business reason for the trade, right? They've got to be able to explain why the trade should work and in detail, right? Come visit us at microefutures.com. I'm JJ. Thank you so much for being with us this morning. Please trade smart out there. Be safe. And we will see you tomorrow as this soap opera continues. Have a wonderful day, and we'll see you soon. Bye for now.